Hello, guys, and welcome back to another post market analysis of Bank Nifty and Nifty. So, in this video, we are going to see how Bank Nifty and Nifty has performed by looking at the price action of today's market. And after that, we are going to see how these two instruments, that's Bank Nifty and Nifty, are likely going to perform for the coming days by looking at our daily chart. So, let's start without any delay. So, here we have what we have in front of us is the Bank Nifty, a 5 minute time frame. This price action is today's price action of Bank Nifty on a 5 minute time frame. As you can see, um, you might be wondering what this gray zone is, but for those who have seen our yesterday's video, that is our weekly special video, there we have discussed and marked this because of all these candles. Okay, you see all this price action that has happened within this zone. So we have marked this zone, that's it. So this is indicating a sideways momentum overall, right from that point to almost till that close on the previous working day in the Bank Nifty. So in our last video, we have asked you to be careful with this, and if you see a gap down opening, and if you see any momentum towards the upper side, and then if you see any weak signs there, then you can pretty much take the call towards to towards the downside. Okay, I mean the call, not the options call. Okay, so and when we have seen opening here, you know that this is going to be a resistance zone now, but on the downside, which is going to be your important zone, is this one. Okay, this right here, from there we have seen a very sharp momentum towards the upper side. So and this is also a pattern called piercing pattern that we have seen the previous working day. So we have marked this wick portion, and that is supposed to act as support for the Bank Nifty. So as you can see, Bank Nifty has started from there. The first real trouble or the real caution has come from these two candles, 925 and 930 candles. See these two candles put together, we can see that this is a bearish engulfing pattern right there, because your red candle's real body is engulfing your previous candle's real body. So this is your first sign. But what are we waiting for is a more confirmation, okay, in terms of location. Okay, so if the same pattern is coming by touching at this line, now you want to uh, be more careful. But because you are a little far away from this, you should let this go. Okay, and location is very much important. And to pick any trade, you need to have at least two odds in your favor. But in order for you to become a profitable trader, we recommend to have you at least three. Third one is nothing but first one is obviously your pattern. Let me just write that here. First one is the pattern from candlesticks, and the second thing is the location, and the third and the most important thing is your risk versus reward ratio. It has to be at least more than one, so that you can be profitable on a longer run. So this is your earlier first caution. You see what happened whenever you see a bearish engulfing pattern. According to our bearish engulfing pattern rules, we need to set the highest point of that as a resistance area. And here is, as you can see, this is given as a breakout from there, a small breakout. We have seen a candle close beyond that, but after that, immediately your next candle is again a bearish engulfing pattern. So this candle is a bearish engulfing pattern. So this time you can definitely take a call, because if market breaks any given resistance area and fail to maintain that, then uh, then there that's something to notice for a professional trader. So here bulls could not maintain this level, and hence you have seen a failure and back towards the downside. And while coming, this has given us another bearish engulfing pattern. So this is the second bearish engulfing pattern coming around, the same, almost at the same level. But this time, this is the candle body size of this bearish engulfing pattern is pretty higher than your previous pattern, its real body. Okay, so here still we are yet to see some confirmation uh, from the location point of view. And also, if you are entering there, your risk versus reward ratio is going to be really high, because your stop loss, technically speaking, it should be higher than this, and your since your day high is there, so you need to be little higher than that. So your risk versus reward ratio is, and see, from there you have seen a sharp reaction as well. So the candle size is little scary here, so it's not recommended if your risk is that much. So there's no harm in waiting for the momentum. And you see here, next caution has come from 10-10 candle on a 5-minute time frame. That is, see, this area is nothing. You might be wondering that, this how this is drawn. Simple. You have to go back to your previous swing reaction and make sure that your wick portion of that, okay, the largest wick portion of that should be marked and drawn. That is what we have done there. And you see here we have seen this, okay, this is a hammer formation. This is touching this area and it's taken support. So what do we have here? Here you have uh, what do we a candlestick pattern, that is your hammer. And what is the second thing is your location. So this is uh, so we have pattern, we have okay, we have the location. And what is your next thing? Your next thing is risk versus reward ratio. Let's mention it as RR. And now let's check whether this has a good risk versus reward ratio. So when you see, you want to always enter into a trade only after seeing this candle getting closed. So you should enter into the last 3 seconds of this candle closing, or immediately after, uh, within the first 3 seconds of your next candle opening. So that should be your entry, and then your stop loss should be just below this. Now you cannot exit from this stop loss if you just see a pass of a candle. If you just see a shadow of the candle, you need to see a close beneath this. Only then we should take that as a genuine stop loss hit. So this is your stop loss. And now where should be your first target? You simply look at your left side of your chart, and here you have the first what do you say, first swing reaction there on the left. So what happened here is, if you notice, see, this has ticked all our boxes. Okay, we have a pattern, we have a location, and we have a good risk versus reward ratio. But look closely, what happened in between is, see, starting from there, here you have seen a good peak high, and after that you have seen two lows on the left and two lows on the right, which means that this is a swing high. And it has gone into a sideways mode for a good amount of time. That is, for more than 1 hour, you are seeing bank nifty trading there in that level. But by now you know that, see, this high is created. So now your target cannot be this, your first target should be this one. So because this swing is created while you are in the trade, so now while again you see, okay, when you are there, you should adjust it to that level. And when you are there, definitely it was taken at around 11:35, and this is a good 85 points of momentum in the bank nifty. It did take some time, but that is how you should play. And next time, see, from here you can either trial your stop loss, that is, you can raise your stop loss from there to cost, or you can take an exit there. Let's assume that your stop loss is trailed and your next target was that. See what happened. This target was never reached, and eventually your stop loss was taken. Let's assume that you have exited at see, at least, see, from there, let's continue again. See, if you have started from there, you have seen this high, and when you are there, you should exit. But let's assume that you did not. You are trailing your stop loss, and you have seen another new high. At this time, when you see in pullback, where should be your target? Your next target should be this. So this is taken, at least there. You should have taken an exit. Okay, so from there, it has again started falling down. So this could have been one nice trade, but the real trade, which was looking very obvious visually, okay, is this one. What I've done is drawn a zone there based on this swing reaction, and moreover this pattern is called a bearish engulfing pattern, which is a reversal sign. So this is a pretty solid pattern that we are seeing. And next time when the market is there, or next time when your bank nifty is there, you can see that these two candles, 1250 and 1255 candles, this red candle has almost engulfed this body completely. Don't worry about this opening of this red candle, which is slightly lower. That's okay until you have a close beneath this. This can be considered as a bearish engulfing pattern. So now if you take that as your a pattern and you have a location, the only thing what you have to look for is your risk versus reward ratios. Look at this case, you have your stop loss there, and your next reaction is your first swing reaction is that. So that is 1.4, which means you have a good risk versus reward ratio. So this was definitely an easy trade at this location. And look what happened after that. It has not only moved to the bottom part of this wick, but also crossing that. Let's assume when you are here, you are again trailing your stop loss from cost to cost. Let's change the color of that line to red so that this is identified as a SL line. So now after this level, now your aim should be towards this. And since on the left side you have so many wicks here, it's a good idea. It's a good thing to do. The good thing to do here is to drag that and readjust that so that it touches all this, it satisfies all these wicks. And now you can see when the market is there, you are reaching your second target, and your second target is also taken easily. Now where should be your stop loss? Your stop loss should come down to your first target level. Okay, so now I'm deleting this blue color line. Now where should be your next target? Your next target, your here, your next target should be this one. But if you notice here on the left, this can also be your next target, but that's subjective. You can decide. Okay, we don't have to scratch our heads too much, but you have to take it with a light head and a strong stomach. That's it. Okay, so if this is your next target that is reached, then your SL line could be here. Sorry, yeah, this is correct. Now your SL line should be there, and after this your next target should be this, but this was not taken. Let's assume that you have when the market is rising, you have exited there. So this is another 95 points. It's a pretty good trade, to be honest. This is really a good trade. This is how you should trade. This is very clean momentum towards the downside. And see what happened after that is, again you have seen a rise from that level. Okay, and it has a little problem here. Now one might argue that why not pick a trade here, because this is a rejection candle. See, first of all, this is a rejection candle, but it's not a hammer. It's not a hammer, or it's not a dragonfly. Because if you notice the top portion of this candle, I'm talking about 215 candle, this candle's top upper wick is more than the size of your candle's real body. So this is not considered to be as a hammer or as a dragonfly dosing. Okay, and moreover your stop loss now in this case should be here, and your immediate target should have been this. So there is, with this as your SL and with that as your target, really there is no risk versus reward ratio, so you don't have to worry about that. So that's it, guys. That is how for bank nifty price action was looking for today. Hope you have understood something from today's price action. And if that makes sense, please do consider hitting that like button for our video. And also, if you haven't subscribed to our channel, please consider hitting that subscribe button as well. Now, let's quickly change our chart to our Nifty, so that after that we can quickly move on to our daily time frame to see how it's going to be like for tomorrow. So here it's very simple. You have started from there, and while rising towards the upper side on the left, which is your latest swing reaction. See, these two are your swing reactions. So we have just extended that. Okay, but I've taken only this weak portion. After forming this weak portion is taken. Okay, and that is just dragged towards the left side. As you can see, it's very obvious that your next your good trade lies there. Your good entry was there. So that's a bearish engulfing pattern at your resistance with stop loss just above that, and with your first target that's there. So this is your risk and this is your target reward, which is playing good. So this could have been a good trade in the Nifty, and after that, if you are trailing, then you could have gone to this level as well, and after that, this is your last level, and you might have exited somewhere between this zone. So uh, this is how Nifty's chart is looking. And also forgot to tell you one more thing here on the Bank Nifty is, now this is giving us a chance to draw a trend line like this based on these three reactions. So one, you have two, and you have three. Okay, so and also there was a chance for us to draw a trend line based on, you see, this is 5 minutes chart. Okay, based on these reactions. See, one, two, and three. And people who have noticed the breakout of that happening, uh, not today, the previous working day. Here you have seen a breakout and also a confirmation candle. Could have taken an early call there, but now generally we don't recommend you to take positional trades, because if something happens, your cap maximum of your capital is at risk. You don't know how much of the cap market is going to open for the next day, so you don't do that. But this is just to explain you that there was a chance there. Similarly, you have today's price action has given us a chance to draw a trend line towards the downside. So let's see how now this is a valid trend line. Let's try to make use of this trend line max when when the Bank Nifty is close to this trend line. Okay, we are done with the Bank Nifty now. Sorry for that switch to the Bank Nifty, but it was okay to do that, considering that that's a valuable point. And here, see, we have discussed that this is a resistance, and at the same level, you are seeing a bearish engulfing pattern here at 12:55 and 1 p.m. So 1 p.m. candle close should be your entry, and from there it has driven you pretty well into the profits. That's a nice trade. So let's quickly remove all these drawings, even from the Bank Nifty, and quickly change our charts to the daily time frame. Yes, here we have the daily time frame, and as you can see, this is today's price action. So there is nothing there is significantly nothing much to talk about, because we have seen a gap opening, and we are there is no strong confirmation of these candles. We are still on a upper trend. I am telling you based on this swing low, because we have seen all these lows are still intact, and now this is another new low after this candle's close. Let me show you that uh, by drawing a quick line here. See, that's the high, this is the low, and this is your high. That's your low, and this is your high. See, this is your low now. See, none of your lows are really broken yet. So on a larger time frame, in fact, it is little zigzag, but on a overall picture, all these are looking good towards the upper side. It is little slow, the momentum is little slow, but it's fine. You're still on an uptrend on a daily time frame, considering the last previous three swing highs and three swing lows. So but that doesn't mean that you cannot trade towards the downside, because see, if you notice only this portion, if you show this chart to anyone and ask what's the trend, and they might say this is down, and it is a little it's rising for some pullback. And now if you see a close below this, you might have to go towards the downside. Yes, that's even correct. So our perspective matters when it comes to the trend of the overall picture. So this is still in an uptrend on a daily time frame, and today's candle is definitely not something bullish that we can say. Okay, because we cannot be bullish until we cross that level. And on the lower side, we have this as our major swing low, and you can even extend it based on this week's here. This is going to act as your support area. So give some time. This is your daily charts are just to give you a major warnings, but all that matters is your intraday swing highs and lows, with which you can play a lot better and come out with a good and better results in your P&L. All right. So here we have the Bank Nifty stat, which is looking still confusing. You need to be careful with this area on the upper side and this zone on the lower side. So be careful with that. Let's now check how the Nifty chart is looking. Nifty is no different here. Okay, like Nifty is looking no different here. But the small difference here is we have already seen this swing low getting broke here, and with the confirmation candle as well. But the confirmation candle was not that strong. It was a doji candle, so we are seeing some trouble here, and we can see that it is pretty strongly in the sideways momentum. See this zone, this box. Okay, this is in this zone. Now you need to see a little. You need to see more the price action happening here to take some good calls towards the upper side. But until then, please note that this is a sideways action that's happening both in a Nifty and Bank Nifty on a daily time frame. So all you have to do is mark your intraday swing highs and lows, and if you can draw trend lines, or you can do that based on your intraday price action. So there's nothing significantly alarming from your daily stats that we can take for the Bank Nifty and Nifty. So hope you have understood something from today's video, and please hit the subscribe button if you haven't subscribed to our channel yet, because this is the place where we discuss about the stock markets in a more meaningful manner like this. And see you in another video. Until then, happy trading. Thank you.